Volume number 3 of the daily FX market breakdown. Welcome all. We're viewing a position I'm currently involved in on GBP JPY after taking two consecutive losses. So the objective behind this video is to go through the rationale and the reasoning behind such setups and the lessons that hopefully I will take from them. So starting on GBP JPY, we can see that we're in somewhat of a profit, and the reason why I've taken such position is because it was almost perfectly matching the setup that I like to focus on when trying to take advantage of the opportunities that the market presents. So I always like to see a clear break of structure to the upside, so BOS that we've got over here. Such moves should be ideally done very impulsively to signify the fact that buyers are stronger than the counterparty and therefore a move towards the upside is likely. I then like to see a clear retracement lower with the formation of two, if not more, equal lows. Equal lows, for those of you who have shown or have had the opportunity to see previous episodes, mean that we've got liquidity sitting beneath. Therefore, the only way for price to finally push to the upside is for it to first go lower, be manipulated into the order block, preferably the 50% of it, and then finally push to the upside. So all of that setup, all of those conditions were fulfilled. I therefore was happy to enter the position, however, not from the 50% exactly, because since I was coming back from two consecutive losses, I wanted to be slightly more cautious and wait for more confirmations. I therefore dropped down to the 1 minute, so the very low time frame, and wanted to see some clear confirmation to the upside. So over here we've got a break of structure and another one, and a continuation lower, a tap into the previous zone of lower time frame demand, and so forth. So I was happy with the confirmation and therefore I executed this position. However, it's always important to be mindful of the higher time frame. Therefore, the 4 hourly does present somewhat of a bearish picture. For those of you who have shown, again, those of you who have seen the previous, if not the first, volume of this short series, would have remembered the fact that I did mention that over here we have violated that fashion of bearish structure. What I mean by that is that when a trend goes to the downside, it has to create lower lows and lower highs for it to be validated. However, in this case, we've created a higher low, and therefore the potential for it to push to the upside and potentially revisit such level at the 153 could be likely. On the other hand, I was happy with the setup, and before waiting for price to reach all the way up there, I'm going to monitor this position very cautiously because I'm expecting somewhat of a reaction both off of that zone of noise, but also from the lower trend line or the bearish trend line, and thirdly from this 4 hourly supply zone. So that's where I'm standing with regards to GBP JPY. Now, with regards to the losses, the first one was on NZD USD, so Kiwi dollar. The reason why I've placed this position is because, again, it did present, or at least in my eyes, a break of structure very impulsively, as we can see over here. We then saw somewhat of a retracement with equal lows, and I was waiting for a pullback before the long anticipated move higher. However, this order got triggered at 6 o'clock in the morning that I was not at the chart, and had I been at the chart I probably would have sort of changed my mind, because the lows that I wanted to focus on were over here. The equal low formation was part of a previous section of price action of a previous day of trading. If I had seen all of this noise thereafter with uncertain price action and then strong, very impulsive move lower, I probably would have not taken, but it's important to be accountable, and therefore no problem, we'll move on and learn from the mistakes. One other position is on GBP USD that I actually re-entered recently. So when it comes to this pair, you will be able to see that I entered it over here because, once again, break of structure very impulsively, continuation lower, formation of equal lows, tap into the order block, and off we go. However, from the previous volumes, I did mention the fact that here we were looking at an hourly demand zone as opposed to a 4 hourly demand zone, that we later came to find more important. The reason why that is because the higher the time frame, the more validity those levels and areas have. Therefore, I was happy to still place the trade, but with the awareness that price could have easily come down there. And I was also happy to take that loss for the opportunity to then re-enter there. And that's what ended up happening. So I took a loss there, and then I dropped down to the 15, saw the fact that we closed with a rejection and then a strong move to the upside, and therefore I was happy to enter this position. We're not in huge profit at the moment, and price action seems to be somewhat uncertain on the back of the DXY strength. Okay, so at the weekend I was monitoring this area as a potential zone of resistance. However, that didn't end up taking place. The DXY, so the dollar against the major other currencies, did manage to push higher into the 92,500 level. Therefore, I'm now interested to see whether this new level or this new zone of supply will be able to hold. It seems like it so far. However, I also had the same sort of story a couple of days ago down here, and that did not end up happening. So it would appear as though, with regards to the dollar index, we have respected this formation. So 1, 2, 3 touches. The trend line is confirmed, and therefore happy to proceed to the upside. However, on the weekly chart, I did mention the fact that we had just briefly pierced through that, and therefore more continuation lower could have happened, because I was expecting this break to just be a fake out and not an actual breakout to the upside. So to recap, GBP USD, I am involved in a new position after taking a loss. The imbalance was filled, and so I'm happy with the fact that price respected the setup that I tried to focus on. With regards to GBP JPY, we are in profit about 30, 31, 32 pips, and then NZD USD, the loss over there. The new area of interest for myself would be clearing off of that daily imbalance, moving towards the 4-hourly demand at the 0.7070 roughly, and then a potential continuation higher in order to respect the bullish structure overall. So that is it from me. I hope you've found some value from it, and see you tomorrow for the day for the volume number 4. Thank you.